Gen Z women are the most optimistic gender and generational group in retirement planning. A recent global survey done among high net worth earners, those earning more than 3.6 million rand per annum, showed that women aged early 20s also believe they will make the most money in 2024. Interestingly enough is that many of these young women own property, and many of them have inherited their wealth. CNBC reports that new avenues of financial resources and different means of financial advice has made them more optimistic about retirement planning. Now, the interest rate narrative has somewhat changed. The strength of the US economy continues to heighten investor optimism, and recent data shows that the US continues to reward wage earners. Certain countries in Asia have recently shown some attractive valuations, especially in the AI space. Now, when considering European equity markets, it does seem there are some opportunities in the shorter dated credit space. Some commentators even believe and have alluded to the fact that Europe should benefit from an upturn in the manufacturing cycle. Now, South Africans seem to be a lot more optimistic nowadays. That is given the fact that the worst of the energy crisis seems to be behind us due to a combination of increased private sector power generation. Now, after slipping from -16 to -17 index points in the fourth quarter of 2023, the Consumer Confidence Index improved to -15 in the first quarter of this year. The uptick in this number was underpinned by the household financial outlook improving. Now, the rand continues to trade slightly weaker than especially a year ago and closed at the end of March on 18.92 rand against a greenback. We can see that inflation is continuing to trend lower, and 1 year ago we were still seeing inflation outside of that targeted band of 3 to 6%. Now, the All Bond Index was down 1.93% this month, while the FTSE All Share Index is up 3.23%. This month, the All Share also managed to outperform the MSCI All Country World Index and the local listed property sector. We have an interesting chart this month on the top 10 Chinese companies by market cap. And in our financial planning section, I want to briefly stand still at the differences between an endowment and a sinking fund. So often the name is used interchangeably for a product with a fixed term or where they are tax deducted within the product. But it is good to be reminded that an endowment is a long-term linked insurance policy. It has at least one life assured, and as such, endowments are subject to certain restrictions. Where a sinking fund may have very similar features and benefits, it does not have a life assured. Now, when considering these two products and when wanting to decide which one to consider for your client, consider the differences in ownership, the impact it has on estate duty calculations, and the benefits or disadvantages of not being protected by creditors. Now, we always feature one of our 4 pillars of outcomes-based investing, and this month we look at achieving consistency. Now, what you see on this screen is the percentage of times the strategy achieved or exceeded returns of CPI plus 4% over rolling 5-year periods since inception. It's clear that the benefit of using an outcomes-based model such as this one is that you can plan with much better certainty for your clients' investment or financial goals. Our models continue to deliver very competitive returns on par with the CISA categories over the relevant time horizons. As always, we share a snapshot containing our model portfolio return numbers, bond return data in the yield corner, money market rates, and also sectoral return data. Now, if you want to download a copy of this Market Smarts document in a PDF format, visit our website or view it on the info box on our YouTube channel or get in touch with me.